Hello and welcome to another episode of the Express Economist. Today we have with us Mr. Sergi Lanau, who is the Deputy Chief Economist with the Institute of International Finance in Washington. And we are here today to talk about the Indian economy, but more particularly the impact of the Ukraine crisis on the Indian economy and the worries that many have expressed about the economic growth in India. In particular, Sergi has recently tweeted that Indian economy is already in stagflation. Now, stagflation, as many of you might know, is generally considered to be a scenario where an economy faces stagnant growth and pretty high, persistently high inflation. But we'll get to know a better understanding about what is stagflation and why Sergi thinks that the Indian economy is already in stagflation. And we'll also look at some of the ramifications that may come to India as a massive oil importing country because of the conflict that is unfolding in Ukraine. So thanks a lot for sparing your time. Sergi, welcome to the Express Economist.
Thank you for the invitation.
So, Sergi, first of all, our readership, the aim of the program is also to sort of explain what is happening. So if you could briefly first tell us what is stagflation and is it a rare thing? Is it a common thing? Is everybody facing stagflation at this point in time?
So sure. So the textbook definition of stagflation is no growth and high inflation. So India doesn't fit the bill in the classic sense because growth will be more than 7% this year, which is clearly not zero, is not close to zero. Inflation, unfortunately, is above target. And also core inflation, once you exclude the prices of energy, you can also exclude gold, you still see that it's way above the target. And that's quite global, so India is not alone. Now, on the growth part, why do I say that the situation does look like stagflation? It is because if one looks at the last few years, starting in late 2018, when shadow banks had some problems, India has consistently grown a lot less than it used to. India usually grew at 6-7%, and that was, I think, accepted that was the normal growth rate for the country. In calendar year 2019, this number already fell to 4%. And it was a financial shock, and it was an India-specific thing. It wasn't happening anywhere else. Then, unfortunately, we had COVID, which affected absolutely everyone. And now there is a recovery. But if you look at where economic activity is today, relative to where it would have been if India had grown at its normal 6% rate since 2018, there is a big gap. And this loss that you can't really see or touch because the alternative is a scenario that didn't happen, right? We had COVID and we had problems with shadow banks, but we are very far from this scenario. Now, the usual thing would be that when demand and activity are low, inflation is also relatively low because consumers aren't demanding as many goods as usual, so price pressure is not so high. But we are not seeing that in India or almost anywhere else. We've had a lot of disruption to supply, global supply. We've seen energy prices go up a lot even before conflict in Ukraine. So we are in a situation in India and in many other countries, Brazil too, for example, where it does look like stagflation.
So, I was talking to some of the economists who disagree with that view, although they don't disagree with the inherent weakness in the Indian economy. And there the argument was that we must take out the COVID impact because the COVID impact is global and sort of affected everybody. And that if you were to take out the COVID impact, then yes, the Indian economy was slowing down, but that was only a short period between, say, 2017 to 2020, just before the COVID. So, how do you respond to criticism that, COVID is not the reason, or cannot be the explanatory factor for and to designate India as into a stagflation economy?
So of course, if you could strip out COVID, things would look better. I think that in practical terms, what we have to ask ourselves is, given that it's happened, and in practice, people have died and the economy has suffered, unfortunately, can we recover to where we were before? And can we make up for the lost ground in terms of how much India would have grown without COVID? And here's where I'm not convinced that it will be possible, because you combine COVID and the shadow banking crisis, and it's a very long period of less than normal growth. And that usually makes some people leave the labor force for good. It makes some firms more reluctant to invest. And this cost becomes a bit of a permanent thing. And I would say to the critics that, no, of course, COVID is not India's fault. And from a policy perspective, it is a very difficult situation to handle, right? Because you see high inflation, but tight policy will be bad for growth. So lowering inflation will cost you growth at a time when growth is already not doing great. So I would say I don't mean it as a criticism of policy making. I think it is it's a complicated situation, and I think it's good from a policy making perspective to think carefully: are we in stagflation? And if we are, how can policy adapt to that? Right? I wouldn't see it as a clash between the stagflation and no stagflation camp.
Right. Like we'll get down to the question of unemployment also, perhaps later in the show. But I wanted to ask you, right now there is this massive conflict happening in Ukraine, and just recently the US president has now banned oil imports into the US, but there is always a threat that oil prices will spike further from here if more countries join in these kind of bans. And for a country like India, which hugely imports oil, we depend on imports for almost 85% demand. What are the ramifications? What are the likely ramifications for India?
So as you say, you did, it is not a good scenario for India because of oil imports, and also because it is a country where the weight of food and energy in the price index is very high. And that's quite common in emerging markets, where relatively speaking, there's fewer people than in the US who can consume lots of services and luxury goods. So the average consumption basket carries more food and energy in percent of total. So that means that the shock will fit through inflation. That's something, again, that is a bit like COVID. It's completely exogenous, and it's not the making of India's government or India's opposition, but it will exacerbate a bit the stagflationary situation. Now, I don't think it will have lots of second round impacts. I don't think it will percolate indefinitely through the economy, in part because growth is not very strong. And in these situations, energy price shocks are a bit more short-lived, but oil is at $130 a barrel, and no one knows if it will come down a lot, a bit, or it won't. And then, of course, as you were saying, there's the import side, where yes, India will see a bigger trade deficit, and that exposes the country to some risk because a bigger trade deficit needs some source of foreign funding. So far, there's been a lot of it through the COVID crisis. Foreigners have put a lot of money into India. They have confidence in India's financial system. They have confidence, at least, in parts of the economy. These flows will probably continue, but they expose India to some risk because if they recede for some reason that could also have nothing to do with India, then you still have to pay for these imports. They are expensive, and then you would have to probably use part of the international reserves the RBI has. So it increases risk. I would still say that it's not the kind of complicated situation India lived in 2011, 2012, for example, when the current account deficit was much bigger than it is today, and oil prices were also quite high.
Right. I'm glad that you mentioned about foreign investments, because one of the things that a lot of supporters of the government and a lot of people who do not believe there's much wrong with the Indian economy, they point out is that foreign investors, whether these be through foreign direct investment or through portfolio flows, and a good marker in that sense is the stock market, the Indian stock markets, and they point to that and say that these numbers are really rosy, and so any information that comes contrary to it, be it unemployment numbers or GDP growth numbers, those or even inequality or poverty numbers or any such information is sort of drowned out by saying that the stock market is doing well. Why is the international investors seeing India to be such an attractive destination if India was in such a bad mess? And that stays true even today. I mean, there's a correction going on right now, but it's a very obvious reason why it's happening. But overall, in the last 2 years, 3 years, this has been a remarkable story. So how do you sort of make sense of that?
So this can be seen in India and in many countries, and it reflects the fact that the stock market and international financial markets reflect on only one part of the economy. These are big companies that can float in the stock market. They're big enough to issue bonds, or they're businesses that are international enough to attract foreign investors. Then what happens everywhere, India included, that many companies are small, very small. So if you employ 5 people, of course, your only option to get funds is your local bank. There's no way you can pay the cost of issuing a bond, and you don't need millions of dollars. You probably need a small loan. And you take a case like India, where informality is very high. Of course, if you have a stall and you sell samosa, you don't really mind what happens in the stock market or not. Your business lives in a completely different world. And I think what we've seen is that luckily India's IT sector, consulting, and other high-tech sectors that employ qualified people have done absolutely great. And that's good. And that does benefit everyone because these people pay taxes, and then these taxes are used for public goods that everyone uses. Now, unfortunately, that doesn't mean that this trickle down will be perfect and will lift all boats. It doesn't anywhere, and I think that probably the part of the Indian economy that is doing the least well is out of the cities. It's in the informal sector, and those are things that can do not so great and coexist with a tech sector that does very well and attracts lots of investors. So it is definitely very good that this is happening. There are still other areas of the economy and policy making that get a lot more complicated.
So one of the criticisms, again, not exactly a criticism, a description, is that some believe that India is heading towards, because of the massive inequalities, regardless of what COVID did. There are all kinds of different papers, some showing COVID increased inequalities, some even showing COVID decreased inequalities. But regardless of that, inequalities are a massive issue in the Indian economy. Some argue that the Indian economy is the way it's functioning, and the K-shaped recovery that we are talking about is leading very happily towards a middle income trap. Some argue that it's not even middle income, it's a low income trap. That we will get stuck in a scenario where only the top 200, 250, 300 million people are the ones who are demanding in a very credible fashion. And that's the economy that is genuine. Most other demand is falling through the floor. And that really holds back the rest of the economy. So you have numbers, the population is in billions, but the effective part of the economy is only in 200, 300 million. How do you sort of see that kind of a worry of a middle income or a low income trap?
It is a risk, and it's one that affects many, many countries. One, if historically you look at income per capita in the world over many decades, it is not often the case that countries make it from the middle of the pack to very rich countries. It happened in Singapore, it happened in Korea, it's happened to some European countries, but you don't find that many examples, right? Out of 180 or so countries in the world, this kind of transitions, unfortunately, are not very common. And that's a challenge, I think, in Asia, China and India face very clearly. China at a higher level of development today, fair enough, but also slowing quite a bit. They're not growing 5-6% anymore. And India, in some ways, in a different range of growth rates, is facing something similar. So yes, I think it's a real risk for the two biggest countries in Asia. And I think it's one that is complicated to manage, and most likely, I think, requires policies that focus a lot on the parts of the economy that are not doing great at the moment. And that's probably, encouraging people to go back to the cities, see how agriculture, which is still very big in India, can do better. And, the kind of policies that in a way they're not so close to financial markets. I agree that it is important to think about the inclusion of India's bonds in global indices and all these things. It will help, but to avoid this middle income trap, we have to think very widely and about the parts that are a lot more complicated.
How much GDP growth should India be aiming at or hoping to achieve for it to actually evade any such trap and to genuinely make that transformation that you talked about?
So most likely we are talking about growth rates going back to the 6-7% range we saw for many years. As a reference, if you want India to catch up to where it would be if it had grown at 5% all the time since 2018, and growth rates have been much lower than that, unfortunately, we should see a spurt of growth now between now and FY26. We should see growth close to 8%. So we have to see a big recovery. Is it going to happen? I don't know, and that applies to many other countries, right? South Africa, Brazil, Mexico have also seen quite a few years now of low growth. It's not negative growth, but it's much lower than it used to be. And that means that income per capita is not doing great. The population continues to grow in all these places, India too. So we should see, I think we should see very, very high growth rates. And it's unclear that globally we can do it. Unfortunately, it's not an India-specific issue. We've seen growth in emerging markets in the last 10, 15 years trend down. And that's not good, but it's happened. And when you see something that is so widespread, I think it tells you that the policy challenge is a very big one, and I think it goes well beyond one government or another, or the specific choices a government has made in a certain area. It is a big challenge for economics and economic policy. And unfortunately, India is one of the major countries in the world that I think is facing it.
Okay, last question. Since you mentioned about this also being a policy challenge, and a lot of time listeners want to ask what is the solution. So, are there one or two policy solutions or recommendations that you would that you have in mind for a country like India, given its vulnerabilities and current positioning, that you think may help India to make the transformation to the next stage?
So I think, the very honest answer is that no one knows exactly what needs to be done. There are things that make sense that I think India can try. If we knew what guarantees success, both the government and the opposition would want to do it immediately, right? With different shades of gray, but everyone would want to do it. I think, to me, at this point in time, one of the most important things is try and help all these people who left the cities and took jobs that are probably less productive now in the country. Try and help them go back to the kind of jobs they used to do, if this is what they want. And then I think now, in a world where food security and all these things are becoming very relevant, I think India has an opportunity to make the most of its agriculture, which is big and important. And okay, it's not high tech in Bangalore, but it is important. It can be made more productive. And if you succeed, it's something that has a lot of implications for poverty reduction too, right? It's not just growth rates. It helps the people at the bottom of the distribution do much better. These could be areas that could be fruitful, but it is a big problem that is it's hard to resolve. I think you have to try different things and see what helps.
Thanks, Sergi. So, just wanted to thank you for being part of the show, and to the viewers, keep watching the Express Economist. Today's episode basically underlines how Indian economy, which was one of the fragile five roughly 9 years ago, is now being seen by international observers as one of the economies facing stagflation. And whether you agree with that assessment or not, there is a certain weakness to the economy, and that requires policy solutions. At the Express Economist, we'll keep talking to the best voices to understand what's going wrong, what's going right, and what's the way ahead. Thank you for watching this episode.